Ben, how do you use investment companies in your portfolios? And can you give us some examples, please?
Sure, thanks, Annabelle. We primarily use investment companies to access less liquid asset classes that you can't or shouldn't access via other fund structures, such as daily dealing, open-ended funds. We really like the aspect of investment companies that has a fixed pool of capital that enables the manager to access these less liquid asset classes. And there are a number of examples I could point to. In terms of the asset classes that you can access, it includes property. And I don't just mean general commercial property. You can use investment companies to target very, very specific areas within property, such as logistics, warehouses, distribution. Examples would be urban logistics real estate investment trusts or warehouse real estate investment trusts, as well as a vast array of other areas, such as, say, supermarkets via something like Supermarket Income REIT, or social housing via Civitas Social Housing REIT. Other examples of other asset classes include private equity and even something like ships, where investment companies literally own ships, which are then chartered out to companies to use. And ships being a particularly interesting example at the moment, where the supply-demand dynamics are particularly in the favour of ship owners. An example here would be Tufton Oceanic Assets. I could mention a whole host of other less liquid asset classes, but in the interest of time, I'll just point to those few.
Thanks very much, Ben. I think we're all very familiar with the problems that open-ended property funds have suffered. Of course, the closed-ended investment company structure listed on the stock market so you can buy and sell shares readily is really suitable for these types of hard-to-sell assets, and you've made that very clear there. Tomiko, where are you using investment companies in your portfolios, and what sort of examples have you got?
Well, we use investment companies through, we've created 2 portfolio risk-based ranges of investment strategies, which only use investment companies to cover the equity portion of those portfolios. And one of the strategies deals directly with income-generating investment companies, and as that over the past year has been really highlighted, that investment companies can hold 15% of their income from one year to the next. And this enables them to have more consistent dividends, which, although never guaranteed, is important for a lot of investors who've come to expect them. We've also found that the benefits of investment companies, such as long-term returns, diverse holdings, and the ability to use gearing and purchase at a discount, especially over the past year, has provided excellent returns for our strategies. And it also lends itself well to being blended with other strategies. A lot of our IFAs have not had much experience or awareness of investment companies. And we found that blending the investment trust portfolios with other more volatility managed, tactically traded portfolios can also help to introduce investment trust portfolios to IFAs. And when the 2 are combined, can reduce volatility and maximum drawdowns, which at kind of times can be experienced by investment companies, but also still provides excellent returns.
Right. And Saftar, how do you use investment companies in your portfolios, and what examples have you got for us?
What we do, Annabelle, is we've got a range of investment solutions for clients, from defensive to more adventurous. And what we do within those portfolios is, for the equity component, we use a range of investment trusts to give us exposure to global equities, thematic equities, as well as into Asia and Japan and the like, and very much using investment trusts because we think they're very much aligned to our investment strategy, long-term, patient capital investing with a high degree of conviction. To give you a couple of examples, we use Scottish Mortgage Investment Trust for global equity exposure, and we use JP Morgan Emerging Markets Investment Trust for emerging markets exposure, giving us that exposure, giving us that coverage in an investment trust landscape.